Today we're taking a look at Zilliqa, cryptocurrency analysis and prediction. All right, welcome back to Crypto Cash. This is your one-stop shop for cryptocurrency analysis. Before we take a look at ZIL, please consider subscribing to get notified as soon as these videos are released. It gives you a head start so you can effectively plan out your trades and make an informed decision. I have years of trading experience, and my goal here is to share my knowledge with the cryptoverse, so thank you very much for tuning in. I always like to start off with the fundamentals, then dive deeper into the technical data. I also provide you with action plans for the future, so you know what I would do in each scenario as a day trader and a swing trader alike. So be sure to stick around to the end for my recommendations. Please note this is not financial advice. This video is designed for educational purposes only. Now let's go ahead and get started with the fundamentals. Zilliqa is a public, permissionless blockchain that is designed to offer high throughput with the ability to complete thousands of transactions per second. It seeks to solve the issue of blockchain scalability and speed by employing sharding as a secondary layer scaling solution. The platform is home to many decentralized applications, and as of October 2020, it also allows for staking and yield farming. The max supply is 21 billion, circulating supply currently at 53%. Today's high is 0.238, today's low is 0.195. I've gotten a lot of requests to cover this, by the way, so just a quick heads up. I apologize to anyone else who has made a request that I haven't hit yet, but at this point currently, this does appear to be a very popular one that most people are requesting. So thank you very much for the recommendation. I promise to get to the other requests soon. Now, in regard to the price, it's changed dramatically in the past 4 hours. So it did blow past the previous all-time high of 0.228, and it does appear that sky's the limit for ZIL. Obviously, it's going to have to slow down eventually soon, but at this point, the current resistance level is 0.24, and it might be a little bit higher by the time I get this video released, just based on the fact that it's constantly making higher highs right now. The support level was at 0.22. And now let's go ahead and take a look at the technical analysis. For my day traders out there, as you can see on the 15-minute chart, ZIL jumped out of nowhere today with a strong increase that doesn't appear to be slowing down. The 50-day moving average was acting as a resistance line recently, and it shot up past that, as well as breaking the actual previous resistance line. Same could be said for the 100-day moving average as well. Neither of these indicators are worthwhile right now, so don't bother using them until the price levels out and they're tested again. Could be another 12 to 24 hours, depending on the price action. Also, the VWAP is working as a strong support level. So it has a medium variance, just be aware of that. It's also fairly irrelevant right now until the price calms down. It will catch up sooner than the moving averages, but it is something to also note. I highly recommend you sit back and wait for the price to level out just a little bit before taking entry. This goes for both swing traders and day traders. So here's my action plan as a day trader in today's climate. I would first wait for the VWAP to be tested before taking a position. That's rule number one in this scenario. And when I say tested, I'm referring to at least two 15-minute green bars. In other words, you need to see two 15-minute candlesticks close in green. In other words, higher than they previously closed the 15 minutes before. And if you jump in before the price has a chance to level out, you do run the risk of losing a lot of potential profit. So I do not recommend you take entry if you don't have the appropriate indicators. So let's just say the price calms down and I see two 15-minute green bars. If it's tested and stays above the VWAP, then I would go in approximately 25%, but only 25, no more. The reason I wouldn't go in 50% or higher is because the price action being the way that it is, right? It's so volatile that it could jump up or jump down. You could get lucky, but you'll likely get burned. I would then switch over to the 1-minute chart to pay close attention to how the VWAP is reacting to the price. If the VWAP is acting as a support level after just say 30 minutes, I would probably add to my position. If the price rejects and drops below, I would sell my profits or even take its potential small loss. But again, a 25% loss on my total position versus a 100% loss is a much different situation. So please be mindful of this, please be careful. The key here is to not go all in immediately after a violent price increase or decrease. Trust me on this, you want to be patient. On the inverse, if I get the indication the price is going down and I would like to short, then I would pay closer attention to the support level established by the VWAP and also the support line if it drops below that. If the variance is large enough for it to break and stay below, just say the VWAP first, then I would take a small position, again probably 25-30%, and wait for the RSI to indicate if the price is considered overbought. Typically anything under 45 is a good entry point. I'd also recommend to see if the MACD is trending downward and losing momentum. If so, this would be a perfect storm for a short position. I would also remember to average down by selling small portions of my total so I can take profits whenever possible. And I do this just in case the price corrects itself and reverses on me. For my swing traders out there, taking a look at the 4-hour chart, I want to note the moving averages don't have any effect and will not for some time until they catch up with this price hike. You'll see that's kind of a common trend with prices that jump up so quickly. The moving averages really have no chance to be able to react unless you go with a very short moving average, and I still feel the 50 and 100 day are the most effective. That said, let's look at the relevant indicators instead. First things first, RSI. It's overbought at 75. This is not a great indicator to go long. I prefer anything under 70. Also, the MACD is trending upwards, so this is a positive technical sign, but be mindful of the momentum that it could shift depending on what happens with the resistance and support levels soon. So be careful with the moving average convergence divergence right now. The sentiment is still very bullish, so the best thing to do in this situation, essentially is to use a smaller frame, a smaller time frame. So what I recommend here is to pick a time frame that's smaller. So 5 or 15 minutes works very well. Anytime the price hikes up like this, we must be careful not to feed into the hype. So just be aware of that as well. And by not feeding into the hype and looking at a smaller time frame, you're a lot more successful, I guess you could say. It works very well for me. Even again, I know it seems crazy as a swing trader. I guess maybe you feel like you need to look at a larger time frame because it's a longer hold. But to find a good entry point, you must shorten the time frame. With all the recent volume, we'll want to use the VWAP, which is the volume weighted average price, so we can see the support and resistance lines and how they're getting respected. I'll explain here in my example. So here's my plan to swing trade ZIL today. If I was feeling bearish first, I would wait until after the RSI is overextended in the 80s and the price hits the resistance level and bounces and holds for, you guessed it, 2 15-minute red bars. Once I get both indications of a sell signal, I would only put in about 20% of my trade position until I keep getting confirmation it's moving down. I always love to sell in small positions, such as 20% of the time. This ensures I'm always profitable. Sure, I might not gain as much, I might miss some opportunities, but I also don't lose as much either. So to me, it just works a lot better. I feel more comfortable doing that. For a long position, I would wait for the VWAP on the 15-minute chart to get tested at least twice, maybe even 3 times. And I say that because I need to ensure the price is staying consistent. I would then take a small position, only about 20% after the VWAP bounces upwards and closes with 2 to 3 green bars. And just to clarify for those of you who might not understand what I say when I say 2 to 3 green bars, what I'm referring to is 2 15-minute candlesticks closing one after the other, green. Green basically implies that the price has increased in that 15-minute time frame from when that 15 minutes opened and that 15 minutes closed. Now in this example, kind of go back to that, when I say 2 to 3 green bars, I say this because the price action is so severe recently that you need to wait until you get further confirmation. Okay, so the next indicator I would use is to see if the resistance level is tested. And of course, in this case, the resistance is 0.24 presently. And you guessed it, before I take a position, I would wait to get further confirmation before adding to my position. So you can kind of see a common theme here, right? Confirmation, add to position. Confirmation, add more to your position. And as you get confirmation that you are losing momentum and the tide is shifting, you take away and remove yourself from the position you're holding by taking small positions. Okay. Obviously, you need to get all out if it reverses quickly on you, but you get the general idea here, I hope. Please let me know in the comments below if that wasn't clear. I want to make sure you understand that. And obviously, feel free to contact me on Telegram, Instagram, or Twitter if you have other questions regarding this. But long story short here, I think the common theme here is to not go all in. And I like to kind of try to drive that home in all of my videos here because of the fact that it's something that people do frequently, and it makes you gun shy after a while, if that makes sense, because I've gotten burned so many times that I got so tired of losing a lot more than I needed to. So try it on for size. If you have it already, take smaller positions when you jump in. Don't go all in first. It's kind of the same concept of putting your feet in the water before you jump in. Yeah, it's great all sometimes, but jumping in and into the shallow end, diving head first can be a problem, right? That's essentially what you're doing if you're not careful. Anyways, terrible analogy, but I hope that gets the point across. But either way, I can't stress this enough. Make sure you set a target, and if you don't hit your target, get out and take your profits. Always set a goal before you trade. The key to being a profitable trader is essentially just to survive to trade another day. Now, if you did find benefit from this content, please consider liking and subscribing, and also let me know your thoughts if there's anything else I can do to improve your trading experience. Feel free to contact me on Telegram, Instagram, or Twitter. The links are in the description below. Also, comment below and let me know what positions you're holding. Obviously, I'd like to learn that because it does help me gain perspective. I'm holding pretty much every video that I make, I have a position. I either have an open position for a long position. A lot of things I do hold on for quite a while. So just note that you're not alone. And if there's anything else you want for me to analyze, feel free to let me know too. Comment below. Let's all learn and grow together. Let's build our wealth, right? That's why we're here. So thanks so much for watching. We'll go ahead and see you again soon.